Hey friends, welcome to the Singapore Market Digest for April 10th, 2025. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. The Singapore market has been showing some interesting movements lately, with several major companies making significant announcements. Let's break down what's happening with some key players on the exchange. First up, we have ST Engineering, a leading technology, defense, and engineering group in Singapore. Their urban solutions business just landed a massive $1.4 billion contract to provide turnkey rail services for the new Taichung Mass Rapid Transit Blue Line. This is a substantial win that covers about 14 years of work, expected to kick off in the second quarter of 2025, which is right around the corner. Despite this positive news, ST Engineering shares closed 0.6% or $0.04 lower at $6.30 yesterday. This slight dip might seem counterintuitive given the contract announcement, but sometimes the market takes time to fully digest the long-term impact of such developments. Next, let's talk about Singapore Exchange Limited, or SGX itself. The bourse operator has been active in the market, purchasing 150,000 of its own shares for a total of $1.8 million. These shares were bought at prices ranging from 12.08 to 12.15 each and will be held as treasury shares. This share buyback activity often signals management's confidence in the company's value. The counter closed 0.8% or started 10 higher at $12 before the announcement, showing some positive momentum. Moving on to Singapore Airlines, or SIA, our national carrier has also been busy with share buybacks. SIA purchased 522,500 shares at prices between $5.91 and $6.05 per share, spending a total of $3.1 million. It's worth noting that the maximum number of shares authorized for purchase is about 148.9 million, so this represents just a small portion of their potential buyback program. SIA shares ended 0.8% or $0.05 lower at $5.59 before the announcement. The airline industry has been through significant challenges in recent years, and these buybacks might be part of SIA's strategy to support share value while the sector continues its recovery. In the banking sector, we've got some interesting movements from two of Singapore's largest banks. DBS Group Holdings, Southeast Asia's largest bank, spent a substantial $26.1 million to repurchase 700,000 of its shares at prices ranging from $36.88 to $37.86 each. What's notable here is that all these repurchased shares were canceled, effectively reducing the total share count and potentially boosting earnings per share. DBS closed 2.2% or $0.84 lower at $37.66 before the announcement. The banking sector globally has been facing some headwinds with interest rate uncertainties, which might explain some of this downward pressure. Similarly, UOB, another banking heavyweight, bought back 100,000 of its shares for a total of $3.1 million prices between $30.71 and $31.38 per share. UOB took a different approach with these shares, canceling half and storing the rest in treasury. UOB's shares ended the day down 3.6% or $1.14 at $30.99 before the announcement. This more significant drop compared to DBS might reflect specific concerns about UOB's outlook or could simply be market volatility. Last but not least, let's look at Venture Corporation, a global provider of technology services, products, and solutions. Venture purchased 10,000 shares for a total of $104,196 at $10.41 per share. The company's shares closed 4.7% or $1.51 lower at $10.40 before the announcement. This represents the largest percentage drop among the companies we're covering today, which might indicate some specific concerns about Venture's near-term prospects in the technology sector. What's particularly interesting about today's digest is the theme of share buybacks across multiple major Singapore companies. 5 out of the 6 companies we've discussed today have announced share repurchases. This could signal that these companies believe their shares are undervalued at current prices, or they might be using buybacks as a way to return value to shareholders. It's worth noting that these buybacks come at a time when most of these companies saw their share prices decline in the previous trading session. The banking sector in particular seems to be under some pressure, with both DBS and UOB experiencing more significant drops than the other companies we've covered. This might reflect broader concerns about the banking industry or specific regional economic factors affecting Singapore's financial institutions. For investors looking at the Singapore market, these buyback activities might present interesting opportunities. Companies putting their money where their mouth is by purchasing their own shares often indicates management's confidence in future prospects. However, it's always important to look beyond the buybacks to understand the fundamental business outlook for each company. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.